All right, guys, coming at you with another video today. I'm going to talk about the 5 ETFs that I will avoid at all costs. Now, these are the ETFs that I have owned in the past that I will never buy again. Guys, I am not a financial advisor. This video is for information and educational purposes, so please do your own due diligence. All right, so let's get to it. All right, the first ETF on the list, covered call ETF on the list, is Tesla. Now, Tesla is a covered call ETF by YieldMax. It came out, I think, late 2022. I didn't start investing in it until probably 2024, maybe mid to late 2024. And I found out, and this is actually my first covered call ETF that I invested. So I found this out by looking at Tesla, and you know how when you look at a stock on your brokerage account, it gives you some recommendations on similar stocks or ETFs to invest. So that's how I stumbled upon it. I basically did some research. Oh, it pays a 70% yield. Got really excited, just like any new covered call. Anybody that was new to the covered call game got excited, did some more research. Knew it was from YieldMax. I watched a lot of YouTube videos, and people were like, "Oh, I'm gonna tie it with $100,000," and the excitement was building up. And then I think it was probably 4 to 6 weeks after doing the research, I said, okay, I had $1,000 in cash. I said, okay, well, let me deploy this $1,000 into Tesla. And basically, the payments were pretty good. I mean, the most I ever gotten out of that $1,000 investment was $86, but I just saw the yield go down. I mean, not the yield, but I saw the NAV decay. And yeah, even though I was, the payments were good at the time, but just looking at the yield drop, I didn't like that. So I basically sold out of that. So that's how I basically got into covered call ETFs. I think now, since inception, Tesla has dropped 83%. And this is the NAV, right? And the distributions are all over the place. They have gone through, correct me if I'm wrong, guys, they have gone through 2 or 3 stock splits. So I don't think they're changing their strategies. And that's why, I don't even care if the underlying Tesla is doing good. I'm just not going to buy it. I mean, if a covered call ETF has multiple multiple reverse splits, that means they have not changed their strategy. So in order, they just got to change the strategy. Now, if they change their strategy to prevent the yield from dropping, then maybe. But as of now, I don't think they're going to change their strategy, so I'm going to avoid it. All right, the next on my list is Coney. This is the covered call ETF that I've invested in as well, and I think I've held this ETF for about a month or two now. It had anywhere from like 80 to 120% yield, even up to 150%. And I followed this ETF for a while before I invested in it, and it was doing great. I mean, I think the first time it came out, it was because these prices start off at $20 a share, and I think one time it got up to like $30 a share. So not only that, if people were invested in this, they got the price appreciation, and they got the good dividend yield. So people were making bank off that. I didn't start investing in that until probably early 2024, where it started to come down, but it was a little stable. Now, this ETF is from YieldMax as well, and it does synthetic cover calls on the on Coinbase ETF. Well, not Coinbase ETF, but just the Coinbase cryptocurrency. The payouts are real good, but just like Tesla, I mean, it was all over the place, and the NAV was decaying pretty badly. It has gone through at least 2 reverse splits, and this port, the ETF is down 80%. It's like 83, 85% since inception. And this came out shortly after, maybe shortly after Tesla. But yeah, um, like I said, just like Tesla, I don't think the fund managers are going to change their strategy. If they would have changed their strategy, they would have already done it now. And if they would have changed their strategy, even lower the yield, then we probably wouldn't have multiple reverse splits. All right, the third cover call ETF on our list, it is another Yield Max fund. And it just seems like I'm picking on Yield Max, but, you know, maybe I am, maybe I'm not. I mean, this is just my opinion. Now, if you guys want to sit here and invest in Yield Max funds, you know, hey, all power to you. I mean, you're still going to make some money, but it's just not for me because I care about my NAV stability. All right, so the third ETF is OT. Now, when it first came out, OT paid a 103% yield. And OT was this ETF. And what the fund managers did was take a wide variety of companies, very, very high risk companies. These companies are unpredictable, not profitable, extreme these companies were extremely volatile. And that's why the yield was super high. 103%, 110%, 120%. But this is another ETF that has dropped immensely. This ETF has dropped 80% since inception. Now, and it also has done a couple of reverse splits as well. Now, with OT, now I didn't invest. I invested a little later on after they made their strategy, after they made the strategy change. So with the strategy changed, OT went from 120% to like 85%. And that's when I got my hands on it, when it was an 85% yielder, and and they changed up their strategy. So I'm like, okay, maybe there's some hope in this. But my hope was off because OT was dropping and dropping and dropping, even with the new strategy. Since inception, it has dropped 80+% as well. All right, the fourth on our list is QDTE. Well, the fourth on my list is QDTE. Now, this is not a Yield Max fund. This is a Round Hill fund. Now, QDTE does 0 DTE options on the NASDAQ index. Correct me if I'm wrong, but I think they do swaps, and QDTE pays around 30 to 35% yield. Now, since inception, it has gone down 35%, which is not as bad as the Yield Max funds. But again, I'm about protecting my, I'm all about protecting my portfolio as much as I can. And, and part of that portfolio protection is making sure the NAV is stable and growing. Now, guys, these are the ETFs that I have owned, but I've sold it all, but I'm not going back to them. So it's gone down 30%, 35% since inception. If you guys know a little or two about options, like 0 DTE trading is much more riskier than doing a 30-day option trade, 45, 60, 90, 120-day trade, because that decay on the 0 DTE trading, it goes very fast. So if your trade goes against you, I mean, it can wipe you out. So, I'm not really a big fan of 0 DTE. Maybe if they lowered the yield and maybe changed their strategies, maybe I would get into this. But I probably won't. I probably won't. All right. Number 5 on our list, and this ETF is from Defiance. So the ticker symbol is SPYT. SPYT does cover, they do cover call ETFs on S&P 500. They don't own the shares outright and do cover calls on them. I think they do a synthetic position as well. And this was paying anywhere from 18 to 20%. No, it was actually paying a 20%. I think it's still paying a 20% yield. I think I've owned this for a few months as well. And just like all the other ETFs that I've listed, I sold this one because the NAV was eroding, and I just didn't like that. And I think, I don't know, I just didn't like, I mean, it's not as bad as the other ETFs, but it was just paying too big of a yield. And it lost 18% of its NAV since inception. So not as bad, but they need to change their strategy up a little bit, to where they can lower the yield. So it could be in competition with like the NEOS products or the Goldman Sachs cover call ETF products. All right, guys, that's all I have of you. If you guys found this video helpful and informative, please like the video, share the video, and subscribe to my channel. Guys, thank you for tuning in. And also, guys, do you own any of these ETFs? If so, put it in the comment section. If you have owned these ETFs in the past, just let me know in the comment section. And if you've owned one of these ETFs in the past, what ETF or ETFs do you own? Have you owned in the past, or have you, or do you currently own? All right, guys. So put those answers in the comment section. Guys, thank you for tuning in. Thanks for watching. I will see you guys in the next video.